Hello everybody, this is Opeyemi. Welcome to my Forex trading course. In case you are new to this channel, you have not subscribed, please make sure you hit the like button and subscribe to this channel. And also click the notification button so that when I post another video, another lesson, you get the notification. Now, if you can remember, last week we talked about the different types of Forex brokers. Said no dealing Forex brokers and dealing Forex brokers. We also talk about the crucial things that you need to consider before choosing a Forex broker. So this is lesson 7. Today we are looking at how to open a Forex trading account. Types of Forex market analysis. Which types of analysis is the best? Now, let's get started. Now, how do we open a Forex trading account? As I told you before, there are different Forex brokers out there. You just have to look for the one that suits you. Now, after finding the right broker for you, you can open a Forex trading account in 3 simple steps. The first one is you select an accounting type. You select an account type, the type of account you want to open. Every Forex broker, they have different types of accounts. So you choose the one that you want to open. Then you register. That's the registration. So after you just go to their website, you sign up, register. So after registration, then you activate your account. First one, selecting an account type. Second one, registration. Then the third one, activating your account. But before you activate your account, they will verify you. Yes, they will verify you. They will verify your person, like requesting for some documents like driver's license, voter's card, and so on. Any form of identification. Some will also ask you for evidence of your address to be sure that the address you put down is where you are living. Some will ask for bank statement and so on. So before trading a dime of your hard-earned money, open a demo account with your broker. You can open a demo account with more brokers. I told you before you start trading, you start with a demo account. And the way you can check the brokers, another way you can check the brokers is by opening different demo accounts with different Forex brokers. So you open a demo account with Forex broker A, open another one with Forex broker B, you can open another one with Forex broker C. So you now try it. You check their spread, check their transaction cost. Which one is more? Which one is less? Then the way they fill their order. When you place an order, how do they fill it? Do they fill it on time? They pull you at the price that you want them to pull you. When you set a stop loss, they will they will fill the stop loss at another price. So those are the things you will check with a demo account. So when you are now satisfied, then you can now go for a real account with the broker that satisfied you. But meanwhile, you remember, I told you that any broker that you want to choose must be regulated. The security has to be in place. So you have to consider the security. That these people, if I put my money, if I give them my money, is my money safe with them? So you have to consider that. So after that, then you now consider the transaction cost. You also check their deposit and withdrawal. Of course, when by the time you want to deposit, you will see their deposit means. Their means of deposit and their means of withdrawal too. You check it. Is it enough? So you check it. Now, that's all about Forex brokers. So I told you the last time that we shall be going to market analysis. This market analysis is what makes you a Forex trader professional. Yes, market analysis. How do you analyze the market? So, as a Forex trader, you need to be able to analyze the market, unless you want to go and pay for signal. Unless you want to pay for signal. But I know the reason why you are listening to this course is for you to be independent, for you to be able to analyze the market yourself and place a trade. Put your target, put your stop loss, and be a winner. Now, let's go. To begin, let's look at 3 ways on how you would analyze and develop ideas to trade the market. There are 3 basic types of Forex market analysis. Number 1, technical analysis. Number 2, fundamental analysis. And number 3, sentiment analysis. Sentiment analysis. There has always been a constant debate as to which analysis is better. But to tell you the truth, you need to know all the 3. You need to know all of them. Before you even know which one is better, now let's go into them. Say, what is a technical analysis? What's fundamental analysis? What is sentimental analysis? Let's go. Technical analysis. When we say technical analysis is the framework in which Forex traders study price movements. So in technical analysis, a Forex trader will study the price movement. You study the way price has moved in the past. You use history, the history of price. You study it. That is technical analysis. The theory is that a person can look at historical price movements and determine the current trading conditions and potential price movement. So as a technical analyst, you look at the history of price, and that is done with the help of a chart. That's what we use. Technical analysis, we use charts. So once you open your chart, you look at price. You look at what has happened before. So from that, you study it, and you are able to come out with your own decision. Now, because of this because of what price has done in the past. And history, as they say, repeats itself. Yes, there's a saying that there is nothing new under the sun. Things that have happened before, they repeat itself. So the same thing happened in price. So that is technical analysis. This is because history repeats itself. There's a saying that there is nothing new under the sun. The main evidence for using technical analysis is that theoretically, all current market information is reflected in price. If price reflects all the information that is out there, then price action is all one will really need to make a trade. Now, let me show you a chart. Let me show you a chart. Look at this. This is a chart here. You see this chart? And see what look at it, the way it's moving. See, look at the way it's moving. Can you see it? Also look at this. So can you see the movement? So by the time you study this, you can come out with an output. Now, look at this chart. See, look at this. You see that this line, price did not go through it. It's just going up, down, and once the first time it got here, it went up. It came here again, it went up again. See, when it got here again, it still went up again, got to this place and dropped again. So those are the things we look at in a chart and see that since price has been reversing here, so that means I can place a trade here. We also look at this also. See, this is also another price action. This is another price action. Before it was coming down, then later it didn't come down again. It started moving in an upward manner. Look at this. So these are the things we look at in a chart. Then we use it to form an opinion and take our decision. That, okay, because of what has been happening, I will place a buy at so area. Once price comes to this area, I place a buy. Once it goes to a particular area, let me say here. You can see the strong movement here. So meaning I can place a sell here, or I can wait for it to come here and sell. So those are this is what we call technical analysis. You analyze price based on the past histories, based on history, based on what has happened in the past, based on price action. This is history. It has happened. So that's it. Now, the main evidence for using technical analysis is that theoretically all current market information is reflected in price, as I've said before. If price reflects all the information that is out there, then price action is all one will really need to make a trade. So you can see all those things I did. So with that, I can form my opinion that once price gets here, it will reverse. So I can sell there or buy. If a price level held as a key support or resistance in the past, traders will keep an eye out for it and base their trades around that historical price level. As I showed you, can remember those lines, the horizontal lines I drew. Those are support and resistance. Let me show you again. See, can you see it? Discover that price was reacting here. So that place can be used as a support. Then when it got to this place, it didn't come down again. It started moving in an upward manner. You can also use this line as a support. When we get to support and resistance, you will know what I mean by support. And here too can be used. But after getting here, it didn't come there again. It started going down. So with this, can form an opinion about price movement. So technical analysts look for similar patterns that are formed in the past, as I told you before, and we form trade ideas believing that price will act the same way that it did before. Technical analysts use charts because they are the easiest way to visualize historical data. So as a technical analyst, you use charts to make your decision. You can look at past data to help you spot trends and patterns which could help you find some great trading opportunities. What's more is that with all the traders who rely on technical analysis out there, these price patterns and indicator signals tend to become self-fulfilling. Technical analysis has been working, and it has worked for many people. So that's why we still use them. We still use it. As more and more forex traders look for certain price levels and chart patterns, the more likely that these patterns will manifest themselves in the market. So the fact that two people look at the same chart of the same currency pair does not mean that they will get the same result. Now, two people can look at the same chart of the same currency pairs, and they will come out with different decisions. Yes, somebody can look at a chart, and after doing his analysis, he will decide. He can decide to buy, and somebody else will look at the same chart and sell. So it all depends on the individual. Why is it like that? The same chart, someone is buying, another person is selling, and they use the same chart. Why? The reason is because price does not move in one direction, no matter the trend. Price does not move in one direction. It goes up and down, up and down. But it may be going in an upward manner. That's in an upward trend. Because we have two types of trend. We have upward trend and a downward trend. And price can be going up and down in the same range. So in an upward trend, price goes up, it comes down. Just as it goes up, it comes down a little, goes up again. So it goes up more than coming down. So somebody can sell. In an upward trend, somebody can sell and make profit. Now let's look at fundamental analysis. Fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect the supply and demand of an asset. If you think about it, this makes a whole lot of sense. It is supply and demand that determines price, or in our case, the currency exchange rate. Using supply and demand as an indicator of where price could be headed is easy. The hard part is analyzing all the factors that affect supply and demand. This is fundamental analysis. What do you do here? You look at all the economic, political, social factors that affect supply and demand. And this is where news comes in. That's why you see forex traders, they wait for important news that can move price. For example, a strong economy will make a strong currency. So when the economy is strong, their currency will be strong. So, and when a currency is strong, you don't go and sell that currency. You buy it. Why? Because the economy is good. So when an economy is good, you don't sell their currency, you buy it because you want it. So you buy it against another currency that is not good. But when an economy is bad, what do? You sell their currency because their currency is weak. Yes. If an economy is bad, their currency is weak. So what do you do to the currency? You sell it. You don't buy a weak currency. Nobody wants a weak currency. You sell it. So let's say, for example, we have the Great Britain pound, GBP, /USD. And you feel that GBP is stronger than USD. What do? You buy. So by that, you believe that the exchange rate of GBP slash USD will go up. So that is economic, that is fundamental analysis. Using the economy of countries to take your decision concerning where price will go. In other words, you have to look at different factors to determine whose economy is doing well and whose economy is not. You have to understand the reasons of why and how certain events, like an increase in the unemployment rate, affect a country's economy. In a country, the way their unemployment rate will affect the economy. So those are the things we look at in the news and in the economic news. So those things, they affect the currency. If the unemployment rate increases, that's not good for the economy. So that means it will affect their currency. And monetary policy, which ultimately affect the level of demand for its currency. The idea behind this type of analysis is that if a country's current or future economic outlook is good, their currency should strengthen. That's it. If a country's current or future economic outlook is good, their currency should strengthen. The better shape of a country's economy is, the more foreign businesses and investors will invest in that country. When investors see that your country is good, they will come there to come and invest. And as they come, they will use your currency. And another country that refuses to provide enabling environment, foreign countries, they will run away from there. And the ones that have not come, they will not come. So meaning that economy is a bad economy. So it discourages investors. This results in the need to purchase that country's currency to obtain those assets, as I said before. If you go to a country, you need their currency. You won't go and be spending your own country's currency in another country. No, it's their currency you will get. And to do that, you need an exchange rate of your currency for their currency. In a nutshell, fundamental analysis is a way of analyzing the potential moves of a currency through the strength or weakness of that current country's economic outlook. That is it. Fundamental analysis. How is that country performing? Once they are performing well economically, that means their currency will be strong. If they are not performing well, that means their currency will be weak. So if you now have two currency pairs, let's say Euro, US dollars. Euro, or let me not use Euro because there are so many countries using the Euro. Let me use one. let me use let's say US dollar, Japanese yen, USD, Japanese yen. The US dollar paired with Japanese yen, which country is getting better? Which country has a better economy currently? So with that, you use it to forecast where price will go. The third one is sentimental analysis. Sentimental analysis. Now, when we say sentimental analysis, what do we mean? The market basically represents what all traders feel about the market. Each trader's thoughts and opinions, which are expressed through whatever position they take, helps form the overall sentiment of the market, regardless of what information is out there. As a trader, you have to take all this into consideration. You need to perform sentiment analysis. It's up to you to gauge how the market is feeling, whether it is bullish or bearish. When I say bullish, we say the market is bullish. That means it's in an upward trend. If you say bearish, that means it's in a downward trend. And you decide how you want to incorporate your perception of market sentiment into your trading strategy. If you choose to simply ignore market sentiment, that's your choice. What is sentimental analysis talking about? That means market analysis is all about traders' views. What are the traders doing? That is sentiment. That's what we refer to as sentiment. What are the traders doing in the market? What is happening in the market? What is the sentiment of people in the market? Is it in an upward? Are people buying? Are people selling? That's sentiment. So you have to decide this. Once you look at, and you can also use the chart to do that. Use the chart. Once you look at the chart, you will see the sentiment. What are the traders doing? What's their behavior in the market? That is sentiment. Traders' behavior. Because it is the traders that move the market. That's the belief of sentimental analysis. Sentimental analysis tells you that it is the traders that move the market. Now, is it all traders that move the market? No. The big traders, the banks, the big banks, the big traders, because they have the large volume. They are the one that move the price. They are the one that determine the sentiment of the market. So they decide where they want the price to go. So you have to determine that. What's the sentiment? What's the major sentiment? Is it in an upward trend or a downward trend? So that is sentimental analysis. At times when you use the news, you say the currency, the news that came out means the currency is stronger. Now, when the currency is stronger, price is supposed to go up. But the the big banks, they can decide to push the price down. Even though the currency is strong, price is supposed to go up. But the big banks, they can decide to push price down, and price will go down because they have the large volume. They will push it down. So that is sentimental analysis. Now, which type of analysis is the best? Which one is the best? Is it technical analysis? Is it fundamental analysis? Or is sentimental analysis? Which one is the best? Technical analysis is the study of currency price movement on the chart, as I've told you before. While fundamental analysis takes a look at how the country's economy is doing. Now, technical analysis, study of charts, study of price movement using charts. Fundamental analysis, studying of how the country's economy is performing. So market sentiment analysis determines whether the market is bullish or bearish on the current or future fundamental outlook. So which one is now better? Which one is the best? Fundamental factors shape sentiment. Fundamental factors shape sentiment. What does that mean? Fundamental factors can bring out the sentiment. That means what happened fundamentally can make traders behave in a particular way. That is sentiment. While technical analysis helps us visualize that sentiment. Technical analysis will help us to see the movement, because technical analysis is history. So technical analysis will help us to see what has happened. Will help us to see the sentiment that has happened. So which one is now the best? And apply a framework to create our trade plans. Those three work hand in hand. They work together. They work hand in hand to help you come up with good forex trade ideas. All the historical price actions and economic figures are there. All you have to do is put those analytical skills to the test. So you need the three analysis. You need the three of them to come out with the best decision as to where price will go. So you don't just use one. You don't just use history. You also need the fundamental analysis. And you need the sentiment too. Because three of them work hand in hand. They work hand in hand. So three of them work hand in hand. So which one is the best? Meaning you have to use the three. You use the three of them. Use the three of them. So for now, I've come to the end of the class. Please make sure you subscribe to my channel, like this video, subscribe, and hit the notification bell so that when I post another video, you get the notification. Okay. Bye-bye.